gosh, look at the crowd.
Come this way.
Those who spread goodness radiate happiness to everyone around them. Introducing LOLC Finance Credit Cards. Fuel the goodness in you.
Welcome to LMDtv. I'm Ashwini Vethakan. Joining us this week on Talking Business is the country manager for Mastercard Sri Lanka and the Maldives, Sandun Hapugoda. Welcome to the show, Sandun. It's good to have you with us.
Thank you for inviting me.
Now, Sandun, according to research conducted by the Bavarian Finance Center, it has been revealed that there is a digital hierarchy within bank service lines, which start with retail banking and private wealth management as priorities for digital technology. Why are banks so invested in digital technology?
Yeah, I think it's not a choice, it's a matter of when. So as an example, what Bill Gates said in 1994, this quote to say that banking is necessary but banks are not. I think banks took for about 25 years to realize what is really meant by that statement. So as an example, not so long ago in 90s even, people even put a half day to go to banks and do their very basic financial services, including balance checks and passbook updates and all that, right? But now the times have changed. People are very busy today. Their priorities have changed, not only for banking, but also for other aspects in their life as well. So only on the other hand, the enabling infrastructure, globally if you look at, we have about 8.2 billion mobile connections in the world, which is more than the population in the world. And even in Sri Lanka, if you look at, the mobile penetration is for about 149%. And out of that, there's a significant amount of smartphone users in Sri Lanka, those who access different services through their mobile, and the internet penetration is also keep on increasing. So I would say this enabling infrastructure is also calling for digitization in the financial services. So question is whether you need to put a lot of focus to and also a lot of focus and money to build your branch network, or whether you want to put a significant effort to build your digital infrastructure targeting this already captured population for the digital banking and digital financial services. So today, if you look at even in Sri Lanka, the interactions with banks, I'm specifically using the word interactions than transactions, more interactions happening digitally than by physical means in the banking sector, even in Sri Lanka today. So does that mean that we don't want physical branches? No, physical branches are always good to build the consumer confidence. However, the digital infrastructure, more digital infrastructure that you have to enable your consumers by bringing in convenience and also ease of access will definitely help to grow the financial services sector. So that's one aspect. The other aspect is by using such digital infrastructure, irrespective whether you have a large branch network or not, you can build better consumer profiles to cater to your customers better. Unlike other typical branch network, you go to one, probably if you are a customer who works with a specific bank branch, you get a superior customer service. But what if you walk into a different branch who might not recognize you? That never happens with the digital channels, because digital channels can bring in a omni-channel experience. Whichever the channel that you choose, you get the better, enhanced, probably personalized consumer experience. Third aspect is the ever-growing challenges and the competition to the typical financial services sector. So if you look at the globally and even in Sri Lanka, you have so many fintechs, you have challenger banks, you have neobanks coming up. Those who are really challenging the typical conventional banking sector with different financial services, and also with a better consumer experience as a one-stop shop, right? So, and also these new players like fintechs, neobanks, challenger banks, they collaborate with each other more to give a better consumer experience, which probably the conventional banks are struggling to do at this moment of time. So it is extremely important for traditional bank to adopt these digital services to be relevant in the financial services industry, or otherwise they will just be a database record, while other fintechs and neobanks will be the front end for the consumers. So that's where I think the importance of investing in digital technology for the financial sector.
Now, Sandun, India is planning to launch its own digital rupee. However, given the volatility of cryptocurrencies, how do you view this development?
Yeah, that's a great question. So crypto is a wider topic in many countries at the moment. Just a minor correction to your statement. Not all cryptocurrencies are volatile. There are stable cryptocurrencies as well. So increasingly, regulators and governments have become more concerned about the open crypto markets, because they may not have real visibility to what's going out there, right? So that's one of the reasons that the governments and increasingly central banks are looking at the possibilities of governing this cryptocurrency-based infrastructure. Some of the countries have enabled private entities to open up their private stable coins linked to their own currencies as well. So if you look at the existing mobile payment services in Sri Lanka, backed by licensed specialized service providers, typically telcos, so they have their own wallets. So the structure of those wallets is that the wallets are backed by actual money kept in a custodian account, and also it's backed by another trustee as well. It's just that it's the same operation. Those systems are not on blockchain network. Just imagine if we convert those mobile financial services, which is available in Sri Lanka today, into a blockchain platform. That could be one of the good examples for a complete rupee-backed one-to-one mapped cryptocurrencies in Sri Lanka. However, despite of that, the greater concern by the regulators and central banks around the globe is to see how they can issue their own digital currencies linked to their own currencies, right? So if you look at globally, there are many countries, those who are in the process of implementing central bank digital currencies. We call it CBDC. There are countries that are already launched CBDCs, including some of the Caribbean countries and African countries. So CBDCs basically will allow central banks to issue currency that is in digital form, which is linked to their country's fiat currency. And that's a new way of transacting, because it can cater to the both wholesale market as well as retail market, right? And also it will really help the economy, especially for an economy like Sri Lanka, to save a lot of cost by reducing the currency in circulation, because money printing and also money circulation, collecting is absolutely a cost for the participants as well as for the government. So I think it makes a lot of sense for an economy like Sri Lanka to look at it. I think globally also many central banks have initiated these conversations. I believe Sri Lanka central bank was in the process of studying CBDCs for some time now. From what I gather, they have very good expertise at the moment with them on CBDCs, and already in the process of initiating conversations on CBDC in relevant stakeholders. So hopefully we should be able to hear some good news from Central Bank of Sri Lanka as well.
And on that note, we'll be going in for a short break.
You love the feeling of being renewed. To stay beautiful every single day. To breathe just like we do, because you are truly delicate, protecting the ones who've been with us through the years. With Sayalac Care, the only wood coating that truly protects you. Sayalac Wood Coatings from JAT.
Welcome back as we continue our conversation with the country manager for Mastercard Sri Lanka and the Maldives, Sandun Hapugoda. Now, Sandun, in 2020, McKinsey reported the pandemic's economic impact would lead to the first decline in global payment revenues in 11 years. However, this was not the case, and in 2022, it released a new report projecting a return to historical mid-single-digit growth, generating global payment revenues of roughly $2.5 trillion by 2025. How do you view this projection?
Yeah, I've read these projections, and I would definitely agree with the trend that they've suggested, because globally, if you look at, there is a continuous decline of usage of cash. We see that as a good trend, so definitely that will come to the digital economy, and also post-COVID return of global economic growth, which is projected between 6 to 7%. Is also happening because people, those who used to be stuck in a specific area without having to do business, and especially impact of this cut down of the tourism, will definitely help to grow the digital business growth. And also, as I said earlier, the ever increasing access to the internet and also the mobile penetration will also help to grow this digital economy and also digital financial services. As I mentioned earlier, the rapid growth of SMEs adapting digital financial services also will contribute, because if you even look at globally, the majority of the businesses are SMEs and MSMEs, and more digital services that they adopt, it will contribute to digital financial services more. So I think the trend is absolutely right, and very hopeful as a significant player in the digital economy about the upcoming trends.
Now, Sandhu, the year 2021 has been referred to as the Great Resignation, or in some cases, the Big Quit, with millions of people leaving their jobs. Now, from a management perspective, what do you think could have been done to retain staff? Or was this something to be expected in the wake of the pandemic?
Yeah, so the way people think of their jobs have changed, obviously. The increasingly employees are now neither looking for a very stable job like how they used to look at the government jobs earlier, nor they are interest of big pays to collect piles of cash anymore, right? Especially with the pandemic and also work from home, people have started to question themselves, asking whether I'm doing the right thing by myself and by the community, right? And gone are the days people studies what societies envied them to study, and also to get a white collar job, get married early, have kids, and spend the entire life to collect cash to help your kids. I think that's not happening anymore, right? People ask, what am I doing? What is the purpose of what I do, right? And some says that this would go back to normal post-COVID, and everybody would be normal. Everything would be normalized after COVID. But I don't think so personally, because I believe people now see bigger purpose of their lives, what they want to do, and this situation will further evolve in with organizations and also with people. And sooner the organizations realize this situation would be better for them, because I think organizations should do a few things to retain staff, to answer your question. One is the inclusivity, because people spend more time at work now than the other engagements. So earlier we had a lot of friends outside, right? Now your work friends are your good friends. So more you create an inclusive network, more you create an interesting place for your people to work. The other aspect is purpose of life. Now, whatever you do, now the younger generation especially, they are questioning whether how impactful to the society my job is, how impactful my job is to the economy, how impactful my job is to the environment. So people have started to actively quitting jobs that is actually harmful for the society and the environment as well. So if you can create an environment or the business which is impactful for the society, economy, as well as the environment, I think more people that you can retain. The third one is proper recognition. So earlier the recognition was only a pay, right? So you are getting paid well, you get a good bonus, that means you are recognized. But now the recognition paradigm also has changed. How you recognize people may not be a really monetary, but also other aspects might come in on the recognition aspect. The last but not least, the possibilities of flexible working environment and flexible working hours. It's not about getting somebody for a fixed time period to work. It's about getting your work done. So as long as your employees can understand that they are contributing to the work that is being assigned, the responsibility that is being assigned, irrespective of the time they work, from where they work, they'll be satisfied. So these are the few things that organizations can think through to give a better purpose to their employees and to have a greater retention.
Our final question for this evening, Sandun. Given the rising interest rate regime the world over, what are the prospects of the credit card sector?
Yeah, credit cards are there to stay for sure. And if you look at credit card interest rate, in Sri Lanka, the credit card interest rates actually have gone down if you look at the past few years. Statistically, the sector in Sri Lanka as well as globally is still growing. Credit card is typically built on the foundation of pay later. So credit cards are pay later, debit cards are pay now. So that's two different concepts, right? Now, even though credit cards are built on pay later concept, now there are better pay later options being built on top of the credit card networks, which is actually complementing the credit card industry itself. So you can use a credit card on a pay later network to get additional credit period on top of the given credit period that you have with a typical credit card. So I think that will also complement to grow the credit cards market. But having said that, we have seen a significant growth in the debit card business as well in Sri Lanka. In case of numbers, we have about 2 million credit cards in Sri Lanka and about 17.5 million debit cards in the country. But now, in terms of transactions as well as volume, the debit cards have overtaken the credit cards, because literally everybody, that's the banked population, about 80% we call it, has a debit card in their hand. So people have started to use their debit cards more instead of withdrawing cash from the ATM, which is a very good sign, and that will definitely contribute to credit card as well. So my sentiments is, so currently debit cards and credit cards put together in Sri Lanka, we have about 2.5 billion worth of transactions, dollars, and if that is about 4% of the entire the payments arena in Sri Lanka. So if we can help to grow this 4% to 10%, that will significantly help the country to, while we grow the digital economy, it will significantly help the country to save cost and bring more convenience to the customers as well.
Well, from plastics to pixels, this has been an insightful look into the world of digital banking. Thank you for joining us this evening, Sandun.
Thank you very much for inviting me.
Coming up, we have the latest updates from Life on Earth. Stay tuned. Welcome back to the show, and here's the latest updates from Life on Earth. In line with its commitment to global climate change action under the Paris Agreement, the EU aims to be climate neutral by 2050. However, the world has 10 years to halve global greenhouse gas emissions to keep the net zero goal within reach, states PricewaterhouseCoopers report State of Climate Tech 2021. As the impacts of climate change become too obvious to ignore, the report notes that climate tech investments have almost tripled during 2021, but venture capital and private equity companies aren't necessarily backing the right climate tech companies. A total of $87.5 billion that was invested over the second half of 2020 and the first half of 2021 in climate tech is continuing to show strong growth. Investments are currently disproportionately aligned towards areas with lower total emissions reduction potential, or ERP, while high ERP areas with lower maturity. However, once a proven business model is developed, investments flow at an accelerated rate. However, technologies remain underfunded. Of the key challenge areas, mobility and transport continues to receive the lion's share of climate tech funding with 281% year-on-year growth. Heavy industry shows a growth of 266%, while financial services stays at 260%, food, agriculture and land use at 132%, energy at 96%, greenhouse gas capture, removal and storage at 27%, built environment at 19%, and climate change management and reporting at 16% respectively. Human activities are responsible for almost all of the increasing greenhouse gases in the atmosphere. 16.2% global greenhouse gas emissions accounted for by transport and mobility, one of the fastest growing sources of emissions. Production, transport and use of energy accounts for 13.6% of global GHG emissions, while food, agriculture and land use accounts for 20.1%. In terms of geography, the US climate tech companies are attracting the most venture capital funding, with $56.5 billion going to startups in the country, nearly 65% of venture capital investment. According to the report, 97% of total climate tech funding goes towards tech that can mitigate climate change, while only 1% of funding goes towards adaptation that will be required to deal with the impacts of climate change in the short and longer term. And that's all the time we have for you this week. Don't forget to subscribe to our YouTube channel and follow us on Facebook and Twitter. Thank you for watching and stay safe.